on the day in trading. In trading, there is always the good and the bad, and then the perspective. And so that's where we are today. We are up 11,450 in live trading and getting back most of those, or all of those losses yesterday. Up on the week just a little bit, up on the month, quarter, and year, close to equity peaks, only about 3K away. You'll notice that we underperformed the hypotheticals by about 9K. Now, why did this happen? You can see in the background all these errors. We had technical errors. Now, I don't know if it's the platform or if it's the dedicated server. My platform is working fine on my desktop. My research platform, I have 3 platform logins on my desktop and 1 on my server. And the ones on my desktop are all working. The ones on my server are not. And so I don't know if it's the TradeStation platform or the something with the internet connection to the server. You get waiting for data request failed, unable to access corporate actions data server. And so this morning we were up in the market. We started having these outages and the market sold off. And in my desktop platform where automation is off, I sold. I just went flat until I could sync up again because the market was kind of started a slight bit of flashiness. And by the time I was looking to turn on automation on my desktop instead, but the market rebounded and then it never came back. And so we've had a lot of volatility in the afternoon, and that would have served us well today, but we didn't get it today. And so the good, we're up on the week. The bad, we really underperformed the hypotheticals. The perspective is that we were 8K ahead of the portfolio with the CPI. And so we are right in line. Month to date is right in line with the hypotheticals now. So we missed the CPI, but we had a technical error, so then they balance out. And so it's one of the reasons why you want to wait for a drawdown. That's what I'm going to do now, because we're in a 29.70 drawdown and the hypotheticals are at equity peaks, and I don't want to risk a worst case drawdown with that extra. So we are going to wait for a little bit of maybe 4 or 5K, depending on the market environment we're in. And so we're coming in. We've just had a big trend day, and we had this huge trend day, and a lot of times the market's choppy after that. But we'll see. It's the end of the month. We have 3 trading days left, and we're going into a holiday weekend. So I anticipate higher prices, but I anticipate there'll be some chop along the way. Even if there's a massive move between now and the end of the month, I anticipate there'll be some chop the next 3 days, and before there's another trend again. And so waiting for at least a 4 to 5K drawdown so we can be in sync with the drawdown levels on this portfolio. I know some of you may have had the same issue. You just wait for that drawdown. It's hard to sit on your hands, but you have to manage risk more than anything in this business. We're about the same as the hypotheticals on the month, ahead on the quarter. I'm going to show you the portfolio calculator. So this is the portfolio calculator as of yesterday, minus 18,910 drawdown, and then plus 20K today. So equity peak in the portfolio calculator in hypotheticals. And in live trading, we are minus 3K, but we're about the same in the overall month, because coming into the day it was minus 1297.50, while we were up almost 8K, I believe was yesterday's numbers, a little bit less than 8K. And so we had that difference because of CPI, and so we're about the same on the month. And on the quarter, it was, you can see it was plus 3,600, and then after today, it's about plus 24K on the quarter in the hypotheticals, and then the live is about plus 37K. So we're ahead in the live, but we still want to manage risk from this point. So we want to sync up with the drawdown. And so this is at an equity peak after today. These are yesterday's results, and we're minus 3K away from last Thursday's. So we're going to wait for that and try to sync up. And the market environment after a trendy day can be choppy, but we'll see. It's the end of the month, but it is still August. So I anticipate some chop and then some more trend into the end of the month. We called this move yesterday. This is one of my desktop servers, and we were talking yesterday about how the VIX was down, and it's down again today, and the market was really sideways. What was interesting about yesterday that I saw late last night was about a 100 point move here, about 92 points here, over 100 here, over 100 here, over 100 here, over 100 there. So 600 points. There's major moves. 1, 2, 3, 4, 5, 6. This one was only 92 points, but some of these were more than 100 points. Everything else was more than 100 points. And so 600 points of moves in about close to a 100-point range. And the energy in the order book, we talked about this, how we anticipated a breakout today. We got it. We were anxious to have a 20K day, and the hypotheticals got it. We did not. But you unfold these 600 points, and you get potentially a 600-point move, or half of that a 300-point move, and that's what we got. And so, pretty confident that the market was going to do what it did today. I'm glad the strategies captured the trades. Let's go over the trades. And once again, I'm on the desktop now, so the strategies are working on the desktop. It was hard to go from automating from one platform to the next if you have 34 different charts. I have 34 different charts. So to turn on automation really quickly, if the market speeds up, and manage all the trades manually, if the market speeds up, then it's difficult. And so let me show you the time of day where the market, it was right here, that fast, flashy move that you saw right here. Market sold off in here, it sold, and then it just rebounded all day. And so most of the afternoons are more volatile, and we didn't get that. So there's a lot of contracts traded too. Let's show you that. Here's the money management algorithm indicator, and the way this worked was, you can see that the market rallied to here, and once it got to here, I was thinking definitely equity peaks today. Broke through 15,250, and it held pretty solid all day. Very smooth afternoon. No chop. We're going into Labor Day this weekend, and so 3 trading days left, and the market has a tendency to move higher into that time period. So what you see here is there was just the robot was stopped out, and then the EVPs got in. I was a little disappointed that we didn't have more strategies at this point, but it kept adding to strategies throughout the day. I prefer to add the strategies down here when the market moves, instead of getting in up here for the small portion of the move. But you can see a lot of times that's the best way to trade, is to add to winners. And even though it brings your average trade price up, it tends to be profitable over time. Counterintuitively, you would rather buy it lower, but adding to winners tends to work better over time, even though we've had some give back days on adding to winners. And the S&P strategies were only minus, or long one, short one, long one. So the S&P strategies didn't trade much today. Nasdaq strategies trade a lot, with as many as 8 contracts. 8 contracts here, and then it slowly exited throughout the day. Here's the signal strength trader for the S&P. It did not trade today. Market position trader for the S&P, long, short, long. And so it would be, let's look at the latest performance summary for this. And so this is what this one shows, up to 1250 today. Signal strength trader for the Nasdaq. And once there was 4 contracts, it got in. And it is minus 330 on the month. On the day, it was plus 850. So like I said, it would have been nice to get in down here. And what we've seen more of is these fast moves and then chop. Now we saw a fast move and then kind of a slow grind higher. So it's beneficial. And let's look at market position trader. And I adjusted this. This shows 18,905. I adjusted this to take the most amount of contracts. So it can take the most amount of contracts it traded was 12. Before we said 5. It has no stop loss, and so this is what it looks like. Unleashed, I guess you could say, trading all the contracts with no daily stop loss. I'm going to fix it back so that you can see what it looks like. So here it is with all the same settings, but I'm going to show you how we set the market position trader to only take 5 contracts. So this will do 5 contracts at the most, and say close, and you'll see this is with up to 17 contracts, which is the maximum number, but historically there's been no more than 12. So if you talk about Nasdaq, if you have 17 strategies, what's the most long or most short? 12 is the most contracts at any one time over the last 3 years. That the 17 strategies in this Nasdaq portfolio have been net long or net short, and so you have to allow for margin for 12 historically, and so 12 is the total number. And I'm going to pause the video while this updates. So here it is, the market position trader with no more than 5 contracts traded, and you can see what it did today. It was up 15,750, and it was down only 3K yesterday, and so there's a 12K difference. And so yesterday the hypotheticals in the portfolio were minus 11.7K, and today it was plus 20.4K. And so based on those 2 days, there is about an 8.7K difference, plus 8.7K in the last 2 days. In this case, there's a plus 12.6K in the last 2 days, trading it like this. And so Friday's trade was minus 4,030. Our live results were minus 3K. The hypotheticals in live were about minus 3K. So it beats the portfolio by plus 11.6K the last 3 days because it really limited losses here. And it only traded 5 contracts. It wasn't in 8 contracts. And from a automated trading systems perspective, trading just one chart with automation is a lot easier. So if you have to turn on and off 30, we're doing 17 Nasdaq strategies and 17 ES strategies. And so if you go from one platform to the next, if you have an outage, trying to manage a chart with 17, or trying to manage a workspace with 17 charts and looking at all 17 windows really quickly to see if there's anything exiting and entering and having to manually adjust is harder than turning on just one chart. And so from a risk management perspective of the daily stop loss and the technical implementation, you gain an advantage. You gain a little bit of an advantage. Your overall net profit over drawdown is lower, but your technical implementation is easier. Here is the average entry price, market position trader, and it waits for the price to be greater than the average entry price. Adding to winners essentially reduces the drawdown, boosts this. It was up today 16,145 and really up about 10K in the past 3 days, outperforming our current portfolio strategy setup just on the Nasdaq alone. And so let's look at the trades on the day. ES only had 3 strategies that traded today, minus 1225 on opening chop, tried to go short, and then gap fill 1 plus 475 going long. And we had tick pulse. It was plus 1350 on tick pulse. So 2 for 3 in the Nasdaq, S&P, Cobra plus 1375, Viper plus 1150, plus 1585, and gap continuation. Robot stopped out that low. Very long losing streak in Robot. We will trade this tomorrow. Wait for everything else to go into a small drawdown. Minus 425. EVP1, big winner on the day, plus 58.75. Plus 58.75 here as well on both EVPs. Really good trade. These two have underperformed, and we were waiting for them to make a bounce back. Today was a good day. Tick pulse was up 235 and plus 1150 on tick count trend, and Q tick reversal was minus 325 and plus 795 on tick long aggressive. Bounce reversal was up 1645, mag 7 plus 975, and then the micro S&P tick pulse was up 135. Gap fill was up 47.50, minus 157.50 on opening chop. Gap continuation in reverse, plus 85. We didn't get this on the S&P, but on the E-mini, but we had it on the micro. So the micros did better than the S&P, to the E-minis on the S&P. Let's look at the micro. Nasdaq, Cobra 3 plus 137.50, plus 115 on Viper. Gap continuation plus 158. Robot minus 425. And then on the EVPs, plus 587 and plus 587. And tick pulse was plus 23. And tick count trend was plus 115. Tick reversal was minus 31. And plus 79.50 on tick long aggressive, plus 164.50 on bounce reversal, plus 97.50 on mag 7. And on Nasdaq trades, I show that they're the same as the E-minis. Once again, these are the trades on the day for Tuesday, August the 29th. Underperforming the hypotheticals, but closing out on equity peaks up on the week. The positives, like I said, positive up on the week, regaining yesterday's losses. The bad is that we underperformed the hypotheticals due to technical errors, and the perspective is that our results on the month are fairly close to the hypotheticals, about 1K less, and we're up on the quarter ahead of the hypotheticals since we waited for a drawdown. So looking forward to tomorrow's trade. We'll trade Robot and wait for these strategies to go into a drawdown, about a 3 to 5K drawdown, so that we can sync up with the worst case drawdown, or not the worst case, but the current live drawdown in the current live trading.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.